Okay, so I just want to go over a few of the rules for this webinar first. I kind of try to implement some rules that way we can kind of get through this as quickly and efficiently as possible. One of the main rules is to kind of keep questions until I ask for questions. I just don't want to keep pausing as I'm going through the webinar to answer questions. So just write down your questions and you can ask them at the end. There's going to be about 10 to 20 minutes left at the end to answer questions, which means there's pretty much no way I'm going to get through everybody's questions. So I'll try my best to answer the questions, but if I miss your questions, sorry. It's just, I can only answer so many questions before the hour is up. Um, okay, so other than that, guys, let's get started with the 3-day challenge. Okay, so in today's webinar, I'm just going to go over some very, very basic stuff. If you've been around Forex for Noobs for a while, if you've ever read my strategy, you're probably already going to know this stuff. But it's kind of important that I go over this stuff today because this is just kind of like the foundation for everything else that's going to come later over the next 2 days. So I'm just going to go over some basic candlestick stuff. The very start of this webinar, the first 10 minutes, is going to be extremely basic to the point of being boring, probably. But I just want to be sure that I cover that stuff for the people who are new and who don't really understand that stuff yet. So I'm sorry to you guys who've been around for a while. You're going to know some of this stuff, but I'm going to have to go through it anyway. But after that, it should get a little more interesting. So what I'm going to do today is I'm just going to do a few slides here real quick and just explain some basic concepts of candlesticks. And then I'm going to switch over to my charts and I'm going to show you some recent trades that I've taken and the members of the advanced course have taken. We're going to take a look at those trades and I'm going to show you how the stuff I showed you at the start, these are basic concepts, have been applied to those charts. And then over the course of the next 2 days, the 2 days after this, we're going to keep looking back at those trades and I'm going to teach you more and more kind of like pieces of the puzzle. And then by the end of this 3-day challenge, hopefully you're going to have a full understanding of how we've taken those trades. Me and the members of the advanced course have taken those trades. Now these are all recent trades, and they're all real trades that I'm going to be showing you today. One is in fact currently open now. It's a daily chart USD CHF trade. I'm not in that one personally, but a few people in the advanced course are in that one. But anyway, let's get started. I'm going to start with the slides. This is going to be some very basic stuff for the first 10 minutes, and then we'll get to the more interesting stuff. So just to confirm, everyone can see my screen correct. It says Forex for Noobs, Candlestick Analysis Basics, and you should be able to see me highlighting and drawing on my screen right now. Just want to be sure you guys can see all this stuff. Yep. All right, awesome. Cool. So let's get started, guys. Okay, so in 2012, I've done a pretty big survey of Forex traders. There was about 400, 500, I can't remember the exact numbers. Let's just say 400 traders surveyed. And I asked a lot of questions in this survey. And one of the questions I asked was about indicators, because personally I trade with no indicators. I trade pure price action, which is what I'm going to be teaching you over the next few days. Now, I got some very interesting statistics from this survey. One of the questions was, how many indicators do you use? And 17% of traders said that they use no indicators, which was actually quite surprising. I didn't realize there was such a big population of the trading community, Forex trading community, that didn't use indicators. So, that was quite surprising. But then, the bad side of that was 23% of traders who in the survey said that they use 5 or more indicators. And it's just crazy to use that many indicators. I don't even know how these people see their charts with 5 or more indicators on. So the style of trading I do is completely indicator free. I look purely at price. That is my only guide. I look at price, and I use price to determine when I should be in the market. Because at the end of the day, all indicators are uh, price indicators. They take price and they run it through some mathematical formulas, and then they just spit out some lines on your chart. So all indicators are a price, and I'd rather cut out the indicators and just go straight to the price. Just look straight to the raw data and just use that to trade. Um, Next slide. So price action is pretty much the key to trading, and candle charts are the key to reading price action. I mean, candle charts, they tell you everything you would ever need to know to get into a trade. Candle charts, they give you all the information you're ever going to need. And if you want to, you could use some indicators if you really feel more comfortable with indicators. But the basis of your trading, the core fundamental aspect of your trading, should always come back to reading candles, because candles are price. And when you're in a trade, you need to know what price is doing to be able to trade and to be able to be on the right side of the price. So candle charts are key. And we're going to be looking at some very basic candlestick concepts right now. So the first thing we're going to look at is this. Now, what is this? This is just a line, but it's not just a line. This is a baby candle. It's a candle that opened a quarter of a second ago. This candle is just open. It hasn't moved up or down a single pip yet. Now, over the course of this candle's life, it's going to grow up. And let's imagine we're trading 4-hour charts or 8-hour charts. So over the next 4 hours, this candle is going to grow up. And if buyers are in control of the market, this candle is going to become a bullish candle. So the point I'm trying to make here is that candles aren't really just basic information. Candles give you a lot of information. This candle here is telling us that buyers are in complete control of the market, because it has no lower wick. It has a big, strong, white bullish body. So this candle here is telling us buyers are in complete control of the market. And this is very important information, especially when you start seeing a string of these candles. It tells you buyers have been controlling the market for a while. And if we get a red candle like this one, that tells us sellers are in complete control of the market. And again, this is very important information. We know that sellers are in complete control of the market. And that tells us we shouldn't be buying right now because sellers are in control. So what I want you to start thinking about, candles as more than just graphs. You need to start looking at candles and understanding the struggle between buyers and sellers. Whenever you're looking at a candle, it's giving you some very important information. This candle is telling us sellers are in complete control. But a single candle alone doesn't really mean much. Candles need to be viewed as part of larger patterns and trends and stuff like that. And that's what we're going to look at now. So what we see here is a chart, and you see some areas highlighted. The red highlighted areas are bearish trends. The green highlighted areas are bullish trends. Now, these candles here, they're giving us a lot of very important information about what's going on with the market right now. So when you get all these red candles here, they're telling us sellers are in complete control of the market. When you're getting these white candles here, they're telling us that buyers are in complete control of the market. And especially when they're this big, that tells us buyers are in complete control of the market. Then it switches back to sellers, and then it goes back to buyers, and then sellers, and then buyers. And the market is in this constant struggle. Buyers are always fighting sellers, sellers are always fighting buyers, and they're always fighting for control of the market. And when you look at candles, when you're reading the candles, they allow us to kind of start to understand who is in control of the market. They give us this valuable piece of information, who is in control of the market. And once we know who is in control of the market, then we can start jumping into trades and trading with whoever is controlling the market. If buyers are controlling, we're going to jump into buy trades, and we're going to ride the trend along with the buyers. If sellers are in control, we're going to be taking shorts, and we're going to ride along with the sellers. So when you look at a chart and when you look at these candles, it's more than just a graph. It's more than just highs and lows. These candles are giving you a lot of very important information. And the main things these candles are telling us are the four four states of the market. There are four states to the market. The first state is ranging, and ranging is kind of important, but it's not very important for the style of trading I do. The most important three states of the market for the style of trading I do are bullish trends, bearish trends, and transitions. Now, transitions are extremely important because transitions, they're that kind of period in between a bullish trend and a bearish trend where we can start to enter the market. So let's check out this same chart again. This is the same chart, but now I've highlighted the transitions too. The transitions are highlighted in blue. So let's take a close look at what's going on here. I'm gonna bring up some drawing tools. Okay, so this first red area here, we have a bunch of red candles. Now these red candles are telling us sellers are in complete control of the market. They're all red candles. They're not very strong, but they are all red candles, and they're telling us that sellers are in complete control of the market. But then when the sellers get down to here, what happens? All of a sudden we get a white candle. And that kind of has caused a disruption in the previous trend. Then we get this other candle. It's failed to make a new low, and again, it just doesn't go in line with the previous trend, the trend that's telling us that sellers are in control of the market. So this is kind of a transitionary period, and after the transition comes the bullish trend. And what I aim to do is get into a reversal trade during this transitional period, or right after the transitional period. And I like to get in right at the start of the new trend and ride the trend for a while and jump out. So let's look at this next one here. So again, we have a bearish preceding trend. Now this bearish preceding trend is quite strong, nice strong red candles. So these candles are telling us sellers are in complete control of the market. And then we get these candles here. Now this is kind of a complete turnaround from the previous candles. It's got a bullish body, and that's telling us that now buyers are fighting for control of the market. Buyers want to control this market, and eventually buyers gain control of the market and they reverse price. Then we come up to here, and we had three very strong bullish candles. All of a sudden we get a bearish candle, long upper wick. Now again, this is a transitionary period. This transitionary period is telling us that we're going from a market controlled by buyers to an undecided market. We're not quite sure who's in control. It's buyers and sellers that are struggling. They're having quite an intense battle right now, and they're both struggling for control of the market. And eventually, the sellers win out, and they take control and they push price down, only for the whole process to repeat itself. We get another transitionary period. Price kind of gets stuck here. We go from a completely bearish controlled market, strong bearish candles. We go to a candle with a bullish body and a nice long lower wick. Then another bearish candle, but it's not made a new low. Then a candle with another bullish body. So again, these candles are telling us that we've went from a market that's controlled by sellers to a market that's undecided. Buyers and sellers are fighting it out, and buyers eventually take control of the market. They push price up, and then it happens again. We get another transitionary period, and then price moves down. Now, this chart here is a very nice example of bullish trends, transitionary periods, bearish trends. Usually there's some ranges in between these kind of periods, but for the most part, this is how the market moves. It moves in a series of bullish trends, transitionary periods, bearish trends, and then you're going to get a range thrown in every now and then. So bullish trend, bearish trend, etc. And I'm going to remove these drawings. This is essentially how I trade. I look for those transitionary periods and I try to get in right after them. I try to get into the new trend. So now I just want to take a quick look at the transitionary candle, the indecision candle, the candle that indicates that the market's undecided and that they're in a tight struggle. So guys, I'm not sure if you were in here at the start, but can we please keep questions until the end of the webinar? I'm going to let you know when when you can ask questions. I just don't want questions interrupting the progress of the webinar. So, um, we're going to take a quick look at indecision, and then we're going to switch over to some real charts, and I'm going to show you some real trades. So how all this stuff, this basic stuff, can be applied to real charts to take real trades. And I'm going to be showing you some really recent trades that have been taken this week and last. So this first highlighted area, that's a bullish preceding trend. Now this bullish preceding trend, it's giving us very important information. The information it's given us is that bulls are in complete control of the market, buyers are in complete control of the market. So we have a nice strong bullish candle, another nice strong bullish candle, another nice strong bullish candle, and another one. So these candles, they're telling us buyers are in control of the market. And just take a look at them. Take a look at what these candles are actually saying. They all have big, strong bullish bodies. They all have very small lower wicks. So most of the progress this candle made was up. It spent most of its time moving up. So this is just telling us buyers are in control of the market. And then when it gets here to this candle, the progress gets a little slower. It's a smaller candle than the previous few. And then we get this candle. Now this candle is the important one. This is the indecision candle. Now when you get an indecision candle like this, it's usually a really, really good sign that we're going to get a reversal. Now, I'm going to explain why it's a good sign, and this is where it starts to get more interesting. So you guys should listen to this quite closely. So the first thing that tells me that a reversal is possibly coming is the long upper wick. Now this long upper wick here, let me just highlight the wick itself. This long upper wick, it gives us a lot of very important information, because what it's telling us is that buyers, they tried to push price up. So they tried to come up to here, but they just couldn't sustain those highs. Sellers came in and they took control of the market and they pushed it back down. And not only did they push it back down, they then pushed it down further than it's open. So they made it move lower, and then they even closed with a bearish body. Now, this candle is telling us that sellers are fighting for control of the market, and it's a complete contrast to the previous candles. The previous candles here, they're all telling us buyers are in complete control. And then to have this candle form in the middle of a bullish trend and in the middle of a buy trend, that tells us straight away, hey, sellers are fighting for control of the market, and we might have an opportunity to jump into a trade here. Now, I wouldn't jump into a trade as soon as this candle closes, because these candles they can form in trends, and then the trend can continue. All this candle is really telling us is that there's indecision, and that's why I call them indecision candles. These candles tell us that the market is currently undecided. There's currently a tight struggle, and that's when when I look at my chart, I usually trade 8-hour charts or daily charts these days. So I check in to my charts maybe 3, 4, 5 times a day, something like that. When I see a candle like this forming in the middle of a trend, that immediately says to me, hey, we could have a trade coming up soon. And then I start planning to possibly take a trade there, because this candle, it's a disruption in the bullish trend. And this candle is telling us that sellers might be coming into this market. And then the third part is the bearish reversal trend. So that's when the sellers take control of the market, they take control and they start pushing down. And I would enter somewhere about here, roughly, and I would just ride that trend down. So this stuff is very basic, but it is pretty much the core of price action. It's where it all kind of begins, which is why I'm doing it today in this first webinar. We're gonna be looking at other stuff in the next few webinars and kind of expand on this, but this is where it all begins. It's just about reading candles. When you look at a chart, you just have to read the candles. So this also works on the opposite side too. I mean, if you have a bearish preceding trend, so sellers are in control of the market, then you get a candle like this, long lower wick, nice bullish body. That tells us that sellers were in control of the market, nice strong bearish candles. then you get this nice long lower wick, and then you get a bullish body on that candle. So that immediately tells us that buyers are fighting for control of the market, and this is where I would start to prepare to possibly enter a trade, possibly enter a long reversal trade. So this core concept here is pretty much what I look for day in and day out on my charts. There's more to it than that. You can't, don't just jump over to your charts tomorrow or this evening and start looking for these patterns and just jump into trades. There's more to it than that, but this is just the basic core of how I trade. So now I'm going to switch over to some live charts, and I'm going to show you some trades. I'm going to show you some trades that are, well, one trade that's currently open, and then a few of last week's trades. And I'm going to show you how I use candles, bearish trends, transitionary periods, and reversal trends to make pips. But before we do that, I'm going to give you guys a quick opportunity to ask some questions, and we're going to keep it brief. I'm going to give 5 minutes for questions, but they have to be on the subject of candles, okay? So if you guys have any questions, ask them now, and I'll answer them real quick, and then we'll move on to some live charts. Okay. So we got a few questions here. I'm just going to quickly read the questions. Okay, one question is, what if price continues to move down, a false breakout? I'm not going to answer that now because that's going to be covered in coming webinars. Like I said, you shouldn't be trading this stuff now based just on the candles. We're going to be looking at entries on the last day of the 3-day challenge, because entries are definitely the most important part, and avoiding false breakouts is extremely important. David, how many indecision candles can you have in a row? I tend to only trade up to 3 in a row. So if I get 3 indecision candles in a row, I'll take the trade. But usually what happens is, if you get 3 indecision candles in a row, you just jump up a time frame and you trade the trade on the higher time frame. So if you're looking at a 4-hour chart and you've got like 2 indecision candles, jump up to the 8-hour and it'll just be 1 indecision candle there. I tend to do that. Peter, that's a really important question. Different brokers are set to different GMT offsets, so your candles are going to look slightly different. Now, I get asked this a lot. Candles are going to look slightly different dependent on the broker's time. But what's important to understand about price is that no matter when the candle opens, price is always telling you the same thing. Price is always saying the same thing. Now, there are going to be times when the candle just doesn't look strong enough to trade. But for the most part, price is always telling you the same thing. So you don't have to worry too much about what your broker's set at. Okay, guys, there's not many questions related exactly to the candles. So I feel I've explained them well enough. Now we're going to switch over to some live charts, and I'm going to show you some pretty cool trades that have been taken recently, and I'll show you how I use everything I've gone over, how I use candles to actually trade on a real chart and make some real profit. We're going to start with actually the USD CHF daily chart. And we're starting with this chart because there's a trade that's currently open on this chart. Now, I did not personally take this trade. Some members of the advanced course did. I didn't take it myself. But it is a really nice trade, and it is obviously based on my strategy. So let's take a look at it. So here we have a bearish preceding trend. Now, this is a bearish trend. We see a bunch of candles with nice strong bearish bodies, um, and it's quite clear that sellers are in control of the market here. It's a seller controlled market for these first one, two, three, four candles. And then what happens? We get this candle here. Now, this candle, it's not quite as strong as the other ones, but it's really not telling us that there's a tight struggle. It's kind of telling us that buyers are attempting to take control of the market because we had that long lower wick, but it's not really telling us that buyers have taken control of the market. Then we get this candle here. Now this next candle, that candle's quite important because that candle's telling us that buyers are making a move to control the market. So this is quite an important candle. It stands out in stark contrast from the previous candles. The previous 1, 2, 3, 4, 5 candles, those previous 5 candles, they're telling us sellers are in control of the market. You got nice, strong, bearish bodies, sellers are in control of the market. But then this candle here, that's telling us that buyers are coming into the market, buyers are trying to take control. So, with this trade, when this candle was seen, people started planning to take a reversal here. And they ended up entering the reversal around about here, I think. And as you can see, it's worked out quite well. It's hit its target. Its target was here up at the next resistance area. These lines on my chart are support resistance areas. We're going to be looking at them tomorrow. I'm going to be showing you how to place these areas here. So I'm not going to be looking at support resistance today, but I'll be looking at that tomorrow, showing you how to place it. But what I just want you to understand today, because today is the first day and we're just going over the basics, what I want you to understand today is the concept that we have bearish trends, then we have indecision, and we have reversal trends, because that's what we're looking for. We're looking for these transitions of power. That's what I call them. We go from a market controlled by sellers to a market controlled by buyers, and in between that period, there's this transition of power. And in that transitionary period, that's where I prepare to enter the trade. And as soon as price comes out of that transitionary period, and in this case, as soon as the buyers take control, that's where I enter the trade, and I enter the reversal. Now, this is a really good way to trade because we're kind of getting in at the start of a reversal. So we're getting in right at the start of a new trend. So this is the new trend here. This is the bullish trend. We're getting in right at the start of the bullish trend. And the thing about trends is the longer they last, the more likely they are to die out. So the longer this trend lasts, the more likely it is to reverse. So if I went to enter with the bulls up here at this point, this trend has already moved a significant amount of pips. So I've lost out on a lot of pips, and there's greater chance that this trend's going to die up here. But I'm entering right at the start of the reversal. I'm entering right down here, and that's what I'm aiming to do. I'm aiming to spot that exact moment where price transitions from a seller controlled market to a buyer controlled market. Now we're going to look at GBP USD. Yeah, this trade was taken by me last week. I took this trade last week. And this was quite a good trade. It did reverse eventually from news, but it hit its target and more before the reversal came in. So let's check this one out. Okay, here we go. So this was this is a GBP USD daily chart trade. And what we had here was 2 strong bullish candles, really strong bullish candles. Now these 2 candles here, they told us right away, buyers are in control of the market. I mean, it's kind of clear what they're telling you. Buyers are definitely in control of the market. It's got huge bullish bodies, relatively small lower wicks. It tells you that sellers, they're not really having a say in where the market's going. It's all about the buyers for those first 2 candles. And then this candle here. Now this is an indecision candle. This candle formed in the middle of the bullish trend, and it's got a bearish body. It's got a nice long upper wick. So that upper wick tells us that the buyers tried to continue to push up. They tried to take price up, but sellers, they reversed that move. They closed with a bearish body, and they also moved low a little bit. So, that tells us not that sellers have taken control of the market, but that sellers are fighting for control of the market. And eventually we got this nice long lower wick here, the reversal trend. Now I entered short around about here on this trade. Well, actually I entered short a little bit higher. I entered short around about here. Um, and this ended up being quite a good trade. My target was here, the next support area. And as you can see, the target was hit, and then it moved down a bit further. I'm pretty sure this reversed because of news. But as you can clearly see, I was able to hit my target quite convincingly with this trade. And eventually it reversed, but I was out of the trade before it reversed, so that didn't really matter. And I think the reversal was news-based, but I'm not 100% sure on that. So this was quite a nice trade last week. It ended up making me, I think, about 85 pips, 90 pips, something like that. And again, this is just looking at a bullish preceding trend, then looking at the indecision. So we go from buyers controlling the market to indecision to sellers taking control of the market. Now let's take a look at, I believe, USD CAD trade. Here we go. Yeah, we'll highlight it from there. Okay, so this ended up being quite a good trade actually. We had a bullish preceding trend here, so buyers were in control of the market. You could see two bullish candles. There was only one really strong bullish candle. It was this one here, but it definitely told us buyers were in control of the market. And then all of a sudden, in the middle of this bullish trend, we got this candle here. Now, this candle told us clearly that sellers were fighting for control of the market, and it also told us that sellers were winning that fight. I mean, it was a nice strong bearish candle. It had a pretty strong bearish body, so it clearly told us sellers were in control of the market, or were fighting for control of the market, but were winning that fight. That's what it was telling us. I mean, we had that upper wick, but buyers didn't even make it up that far before sellers took control. Had a nice strong bearish body. So with the price action was clearly telling us sellers are trying to take control of the market, and eventually we got this nice strong reversal here. This trade was entered about here, I believe, and it was closed out around about here. I think some people stayed in and tried to take some more pips down here, which they succeeded in doing, but the bulk of people closed out here at the first support area. So again, this is just a kind of very simple concept. What we're looking at is we're looking at buyers taking control of the market at first, with these first two candles here. Then we're looking at indecision forming, indecision telling us that sellers are trying to take control of the market. Then we're getting in at the start of that new trend. We're getting in at the start of that reversal trend. And I'm going to be discussing entries and all that kind of stuff in the next few webinars. So don't worry about the entries and stuff, and don't worry about the support resistance areas, these are dotted lines. I'm going to be discussing that tomorrow, and entries I'm going to be discussing on Thursday. But I just want you to understand for today just the basic concept of candles. Candles are giving us very, very important information. They're telling us buyers are in control of the market. Then they're telling us when the buyers are losing control of the market and the sellers are gaining control, and then we can enter a short trade. Or, in the case of a bullish reversal, candles are telling us sellers are in control of the market. Then they're telling us when sellers are starting to lose control of the market, and we can enter a bullish reversal trade. So candles, they give us a lot of information, and I use the information they give me in this way. Now I'm going to show you another trade. Now this one was a really good trade, and this one really illustrates the power of reading candles. Guys, can we please hold questions until the end? I'm only going to show you two more trade examples, I think, and then I'm going to open up for questions. So yeah, let's keep questions until the end, guys, please. Okay, so this Euro CAD trade, this is a Euro CAD 8-hour chart. this was quite a good trade last week. We had a bullish preceding trend. It was a nice strong bullish preceding trend. Part of the way through the trend, I believe this was caused by news too. We got a nice move by sellers, but it was quickly buyers quickly regained control of the market and they pushed up into this resistance area. So this was a bullish preceding trend, bullish controlled trend, and then what do we get? We get two indecision candles. Both these candles, they indicate that sellers are fighting for control of the market. So we can see that buyers tried to push up on both occasions, but sellers turned that push around, and they ended up closing with bearish bodies, which is always a good sign. And also, they created some new lows. So this candle here created a new low over that candle. So when price creates new lows, that tells us that sellers are doing their job, because it's in the seller's, what a seller wants to do is create lower lows. And once the seller has created lower lows, it's a pretty good sign that we're getting a reversal in that trend. And then we ended up getting the reversal. So we had bullish preceding trend, indecision, and then this nice strong reversal, and it was an awesome reversal, that one. Ended up being quite a good reversal, and I believe this trade was held for the second drop too, down to here, by some people. Yeah, there's going to be a recording of the webinar. Okay, I think we'll do, yeah, maybe one more example. Yeah, we'll just take a quick look at this USD JPY chart. I don't have many lines on this chart because I don't really trade USD JPY that often. But we'll just do one more really quick example, because this one was a little different. So I just want to show you that they're not always perfect. Sometimes they're going to be a little harder to trade, like this one was. So with this one, we had a nice strong bullish preceding trend. We had indecision forming near resistance. Now this indecision again told us that we were going from a buyer controlled market into a market where buyers and sellers are fighting it out for control. Then the next candle, we had a nice long upper wick. So that suggested that buyers were taking control of the market. But by the end of the candle, it had dropped down and sellers took control of the market. So it's not always as easy to read. I mean, the first examples I showed you, some of the recent trades, they were quite easy to read. This trade wasn't as easy to read, and it wasn't as easy to read because buyers did make a push for control of the market after the indecision formed, but eventually the sellers won out, and it was the start of a very nice bearish trend, a very long bearish trend. But the trade wasn't held that whole way. I think it was held till here. And it was closed out on the first 8-hour candle. But that's all I'm going to show you in terms of examples for today, because, like I said, today we're going over just the basics. I just want you to understand the core concept of how I trade. I look for these transitionary periods, and then I enter trades at those transitionary periods. And in tomorrow's lesson, we're going to be looking at the support resistance areas that these transitionary periods form on, because they're a very, very important part of the puzzle. The support resistance areas that they form on are very important. And we're going to be looking at placing support resistance areas tomorrow. So before anyone asks, how do you place support resistance areas, just know that we're going to discuss that tomorrow. So please, there's no need to ask that. And wait, why is that moved over there? Okay, great. And now we're going to open up for questions. And I'm only going to answer questions relating specifically to what we've talked about here today. I'm not sure if there's going to be many questions about this because it is a very basic concept. And like I said, we're going over the basics today, but the coming webinars are going to be a little more interesting. And by the third webinar, you're going to have a pretty good idea of how to trade these reversals. Not only how to spot them, because that's what you've seen today, kind of how to spot when a reversal's starting, but I'm going to actually show you how to trade them. So let's open up for questions. If you have any questions relating specifically to what we've talked about today, I'll answer them in case I haven't gone over anything in enough detail. Okay, there's so many questions. I'm gonna try to answer as many as I can. Uh, but just give me a moment to read them. Um, Joe from Portugal is asking, the size of transition candles doesn't matter comparing to the previous trend candle size. No, the size of the indecision, the size of the transition candle doesn't really matter. Um, I mean, preferably I like to have a wick that's not too long on the indecision candle, just because I like to place my stop loss below the wicks. But even if the wick is really long, like let's say the wick was down to here, it wouldn't really matter. Indecision's indecision at the end of the day, as long as I'm being told by the candles that there is now a struggle between buyers and sellers who control the market, so that we've gone from a seller controlled market to a struggle, to an undecided market. As long as I'm being told that by the candles, I don't really care what size they are. It's just that information, that piece of information is important. The information that we're now looking at a struggle between buyers and sellers, because that's when you can start entering reversals. Kevin, yeah, that's very important. Kevin's asked, so reversal candles aren't just pin bar candles, but a concept, I guess, based at SR levels. And that's extremely important to understand. And it really annoys me when people try to teach reversal trading on other websites, and they just call them pin bars and just say, "Oh, this is a reversal candle," but they don't explain exactly what's happening there. You have to understand what is happening with this candle. This candle is not just a reversal candle. In fact, it is not a reversal candle. This candle here is not telling us a reversal is coming. This candle is telling us that there's a struggle between buyers and sellers. It's saying there's indecision currently. But price can very well continue to move down after an indecision candle. I mean, check out this candle here. This candle indicates indecision, but price continued to move down. And these candles form all the time in trends. Indecision candles form all the time in trends, and price just continues to move on after them. There's no such thing really as a reversal candle. Candles only tell us that indecision is there, but price can continue to move on straight down. So if we got that indecision, let me highlight that here. If we got that indecision here, these indecision candles, um, price can continue to move down from here. There's nothing to say it's going to reverse. There's a few ways to figure out whether it's going to reverse, which is what we're going to be looking at in the next few webinars. But it's very important to understand that these aren't reversal candles. These just tell us that there's indecision in the market. So you should stop thinking of candles as reversal candles, pin bars, and all that stuff. Um, it's not that simple. Candles are a concept, and essentially these candles are just a story of buyers and sellers. We're seeing the story of buyers and sellers unfolding as these candles form. We're seeing buyers interacting with sellers. If the candles are all bearish, big strong bearish bodies, tells us sellers are in control. That's what the story is telling us. Then when we start to see indecision, that's telling us that sellers are no longer in control. Buyers are fighting for control. And then when we see that reversal, it tells us that buyers have in fact won that struggle and that they've taken control of the market. So yeah, Kevin, that's a very good point, and I'm glad you said that because um, candles are a concept. It's not just, oh, this is a reversal candle, so I'm going to jump into a reversal trade here. It doesn't work that way. Divergence, questions about divergence. I don't use divergence because I don't use indicators, so I don't look at divergence. This is a question about my charts. It's not really related exactly to what we talked about today, but I guess it's a bit of an important question. I'm charting with our Parry MT5. This is a demo account because I don't really show my live account during webinars, but I do have an account with our Parry MT5. And I also have an account with GFT Forex. But yeah, I use our Parry MT5 for my 8-hour charts. I don't only trade 8-hour charts, I trade daily charts too. And most of the trades taken on the 8-hour chart can also be taken on the 4-hour chart. I just find that the 8-hour charts are a little smoother, a little easier to read. But the trades that form on the 8-hour, 95% of them are taken on the 4-hour too. They look pretty much the same because it's just two candles instead of one. So if you don't have 8-hour charts, don't be too worried. You can take all these trades on the 4-hour charts. All right, there's a question about does this stuff apply to every time frame? Yes and no. It does apply to every time frame, but the higher you move up in time frames, um, the more accurate this kind of stuff gets because over the higher time frames, you're less likely to get erratic movements. So if you're looking at 5-minute charts, you're more likely to get kind of these erratic movements. But if you look at the longer time frames, everything's a lot more smoothed out. So it's a lot easier to see these reversals coming. And I trade mainly these days the 8-hour charts and the daily charts. And what I love about trading these higher time frames is I have, I can see trades coming a long time before they happen. So with this trade, for example, I didn't take this trade personally, but I'm just saying, for example, you could see this trade coming a long way off because you have the bearish preceding trend. So you would check in, I don't know, every day here. Then you get this candle. So this is the first candle that says, hey, there might be a reversal forming, it might happen. Not too sure, but this is where you would get alert. But then 24 hours later, you get this candle. And that candle's telling us, ooh, yeah, we could get a reversal here. So that's like 48 hours right there where you know that a potential reversal is coming. And then with this candle, that's when the reversal actually hits. So you have such a long time to plan out this trade. You have a long time. And even on the 8-hour charts, you have quite some time to plan out trades. I mean, 8-hour charts, you only really have to check them 3 times a day to see all the candles forming. When you see this first candle, that would be your first indication that we might get a reversal. You check in 8 hours later, you get this candle, and then 8 hours later, and you get the reversal candle. But that gives us a nice 16 hours to know that that a reversal is coming, and you could jump into a reversal trade here. Adian is asking, do reversals work in ranging markets? Reversals are pretty much the most consistent way I've found to trade over the past, I don't know, 8 years or so. Breakout trading was fantastic in 2008, 2009, 2010 when the markets were ranging a whole lot more. I mean, the average daily range for GBP JPY in 2008, 2009, 2010 was 500 pips, and routinely you would see GBP JPY move 1,000 pips in a day. And back then, reversal trading was good, but breakout trading was also good because you'd get these nice long trends and you could enter breakout trades. But the only thing that's remained very, very consistent is reversal trading. You could trade reversal trading back when GBP JPY was moving 1,000 pips in a day, and you could trade it now that GBP JPY is moving 150 pips in a day. Reversal trading has been pretty much the most consistent way I've found to trade, and it does work in any market conditions. There's trades pretty much, no, there is trades every week. Just 1 second, guys. I'm just reading through the questions. There's a question about a setup on GU. This here. Wait, so who asked that? Jeremy T. Nick, what are your thoughts on the 8-hour setup on GU? Was the indecision candle not big enough? The indecision here is that one there. That's where the first indecision candle came in. With this trade, it wasn't the indecision that wasn't big enough. It was the preceding trend. Preceding trend was too weak, and I wouldn't have taken this trade. But I'm going to explain that in the coming webinars. I'm going to talk a lot about preceding trends, especially on these on the 8-hour charts, because there's something very important about 8-hour charts that excludes this trade from being taken. I don't take 8-hour chart trades that the bulk of the preceding trend formed before the weekend. I don't like taking trades on smaller time frames that are formed over the weekend. But anyway, we're going to be talking about that in coming webinars. But no, this here was not a trade. Damon, not trade. I personally don't trade NFP. What are your thoughts? Jeremy, what are your thoughts when multiple setups are forming on similar pairs like EU, GU at the same time, or Euro Yen and USD Yen? Should you trade both to limit risk or trade the best setup? It's really up to you at the end of the day how you handle a situation like that. I tend to just pick the best setup, but I'm happy with taking 1 to 2 trades per week personally. A lot of people in the advanced course want to take more trades than that, so they would trade both setups. My strategy isn't really limiting in that sense in the amount of trades you take, because the amount of trades you take is really something personal to you. That's money management, risk management, and that's not dictated by the strategy itself. The strategy itself is just the core concept of price action and using price action to take the trades. But at the end of the day, you have to decide how you want to manage your money. Obviously, taking the same trade on the same trade on 2 different pairs, in my opinion, opens you up to more risk. So I wouldn't do it because I'm a very conservative trader. Thanks for clarifying that. Oh, that's a good question, David. Does data from candles take precedence over news events? For the most part, I stay out of the market with big news events like the NFP report. If NFP is coming, I probably wouldn't take the trade. So technically speaking, news takes precedence over the formation of candles because news can be disruptive. It can disrupt trends. If buyers and sellers are struggling and buyers take control of the market, that news it can cause a bit of a disruption, and it can reverse the trend. So news tends to take precedence. Yeah, Fabrice is asking, so Confluence makes it all. You wouldn't take that USD CHF trade between SR, but at support resistance you would take it, and that's correct. I would only take trades at support resistance because I know at support resistance buyers and sellers, there's buyers or sellers grouped there waiting to enter the market. But again, support resistance is something we're going to discuss tomorrow, so we'll take a look at that tomorrow. And when I talk about support resistance tomorrow, a lot of what we talked about today is going to come together and it's going to start making a lot more sense. And then on the last day, when I talk about actually entering the trades, that's when it's all going to kind of come together and you're going to see how kind of easy trading like this is and how powerful it can be. But yeah, the support resistance for tomorrow. So. Kathy. We're going to be talking about support resistance tomorrow, so I'll answer that tomorrow. How long do I hold trades in general? I hold trades for about, I don't know, 2 to 3 candles most times. Sometimes longer, but most of my trades on the 8-hour run for about, I don't know, 8 to 24 hours, let's say. On a daily chart, my trades run 1 to 2 days, sometimes 3 or 4 days, but most of the times they're closed out pretty quick. Jeremy, do I look at lower time frames to get a more conservative exit? No, not really. I found that looking at lower time frames can just scare you out of a trade because you're going to start to see potential signs of reversal on the lower time frames and you're going to jump out of the trade way too early. I don't look at lower time frames. But we'll talk about exits and stuff on the last day. And yes, this webinar will be recorded. It will be recorded, it will be uploaded, and you guys can watch the recording. Stops, is that what you meant, Jeremy? No, stops are usually determined either by the lower wick in the case of a bullish reversal trade, or the upper wick in the case of a bearish reversal trade. So in this case, the stop would be determined by this wick here. I try to place it below here, but if that's too low, then I would just place the maximum allowable stop as per my risk or money management rules. But if you want to jump down to a lower time frame, you can to determine a good stop. I don't really do it. I don't feel the need to, but if you want to, you can. It's not a bad way to do it actually, because you know, if you can't put the stop that you're looking at on the daily chart, you might find a nice place to enter a stop on the 8-hour chart. But again, this is stuff we'll talk about on the last day. Anyway, guys, I'm going to call an end to this webinar because it's been about an hour now. So I'm going to stop this webinar. I'm going to be in the room for another 5-10 minutes, I guess, and I'll answer a few more questions here and there. But